But from one Sandeep to another, Sandeep Raina, the Associate Director of Edelweiss Investment Research, joins us now on the show to talk about a couple of his stock ideas as well as what's been happening in the market. Sandeep, good afternoon. The common view is that, PSU banks is a strict no-no for now, considering the amount of pressure that they are facing in terms of asset quality. What would you do with a name like SBI after looking at the numbers that just came out?
Yes, I saw the numbers, but I think in PSU banks, I don't think so. For that matter, any bank, the simple number one number that we have to track is only GNPA and NNPA. If let's say NNPA and GNPA on track, then I think the stock can be bought, and that is what is happening in the market. So for SBI, see, most of the banks are growing on the revenue side. The problem is only the GNPA. So let's say if we look at the results of Access or for Federal, or for that matter any other bank. So there was a change of 100 bips on the GNPA side. So the market actually punished those stocks. However, on the SBI side today, if you see the bip change is only 30 bips, which is more or less on track. And also the recent Bhushan Steel is positive for them because they will get some kitty from that. Now, so based on that, the numbers look good. So that is how you have to track the banks these days. There is nothing else you have to do for them.
Okay, let's Sandeep. Hi, good afternoon. Your thoughts on pharma names and how to approach that?
I think pharma more or less would be an avoid, frankly. Although recently, if you see the numbers of Lupin, or let's say, I think that they are also looking at more or less in line. So the downward trajectory, what was happening in the market for pharma stock, that has arrested, no doubt. And also on the valuation front, more or less they are not very expensive. But having said that, will I be a buyer in pharma with a lot of vigor? The other answer for that is no. I'll be just still watching the pharma stocks, and then specifically I'll be investing in them.
Okay, so I know this is a very tough market now. Mid caps have corrected significantly and portfolios are bleeding. But for somebody who's perhaps looking with a 3 to 4 year time horizon, are there any interesting value buys in the mid cap space? Anything that you'd want to talk about?
So trust me, if you look at the broader market, maybe market is looking not good. Specifically, the mid cap index is looking very bad. If you see the charts, just to check how the lines are moving, it's looking very, very bad. But having said that, there are a lot of things that are looking good. Let's say in chemical space, things are looking interesting. In few infra space, things are looking interesting. Few NBFCs also looking interesting. So specifically, let's say I'll talk about a company called Deepak Nitrite. Now, Deepak Nitrite is looking interesting, and if you see the off-late results, the results are also good. But the biggest point in Deepak Nitrite is the new plant of acetylphenol that is coming on stream, and I think it will come by July of this year, so further 2 months. And the huge demand for acetylphenol. It's a fully 100% important product, to be precise 95 to 96%. So that all will happen. So the entire ramp up will happen faster because the demand is very strong. Also the spreads are moving up in this. So this company, in fact, the entire project of 1,000 crores will give them revenue of 1,300 to 1,400 crores in just 1 year. And look at the profitability that will move up. So in this year they have done close to 80 odd crores, and next 2 years they will do some 250 odd crores. So given the kind of increase in PAT, this stock should be bought. And in fact, we have to buy all the companies where the results were decent and the valuations are under control. For this company, valuations are more or less under control. That's how it is.
Okay, Sandeep, it's been, of course, as Sonia said, a tough market for mid caps. I wanted your reaction, for example, in what's happening with some of these high profile names like Voltas, Symphony after numbers, and the market's been quite brutal with some of these.
See, I'll tell you, market is playing a very, very, the thing is what they're doing is, if you're not giving us numbers, we'll just sell you off. That is a very Symphony, a very, very high PE stock, has always delivered, but this time it couldn't deliver. Similarly, the same thing happened with Voltas also. Darling of the market, the number were not as expected, the valuations were high, you sell the stocks. So market is very, very clearly demarketing. If you are showing me the numbers, I'll respect you. Still also I'll sell, or maybe there is a weakness, but if you are not showing me the numbers, then then you are just there, I have to sell it at any cost.
But then even with the case of, some of these companies that are delivering numbers, the stocks are under pressure, right? Sandeep, I mean, look at something like an Ashok Leyland. The numbers were pretty good this time around. There were no problems. Okay, maybe slightly below what the analysts were expecting. But otherwise, it's been a good performance all year round. Why do you think there was a big sell-off there?
So, in fact, Ashok Leyland, if you see, the stock was down before the result by 15-18% and I think post-result it has recovered today. I think it was up 7%. That's what we're looking at. Now, Ashok Leyland, I think market will come back and kind of respect him again because the numbers they have delivered. But having said that, the stock is not cheap at all, given the fact the single line product, although growing, but it's an expensive stock. So I'm saying look at other auto stocks also, let's say Maruti, which again is expensive stock, but market is not giving the kind of respect to Maruti because again from the top it is down 15-18%. So I'm saying market overall is very weak because since we not talk about that because there are 4-5 factors which we need to look at and the biggest is the bond yield. So I don't think so there's a possibility of a bull market if yields are above 8% and we are currently at 7.8. Then there is a crude, there is a fiscal deficit problem, there is an inflation that will kicking in because of crude. So there are a lot of things that is happening and people generally want to be light and that's why any small trigger in any this thing that they want to sell it off. It's as simple as that right now. People just want to be light on equity. They want to be in cash on more or less on the mid cap. All the bad mid caps they just don't want to be touching. They just want to be away from that. Only the earning respect is there. That's about it.
Okay, by the way, it's a lot of these FMCG names are now hitting highs of the day. Nestle, for example, that one is at the high point. Just pull out a couple of others. Dabur is at high point. A couple of other consumption names also doing well. Page Industry is also at the high point. Pidilite is at high point. So a couple of these names have done well. Thoughts on this space? Then we've seen quite a bit of rally, of course, but most of the stocks at the high point. So how to approach some of these names here?
I think FMCG is one of the best performing and if you see the results also, most of them have delivered good numbers. So HUL, they have given very good numbers and also the commentary given by the management is very, very strong. Similarly, Dabur has given good set of numbers and the commentary is very, very strong. So on the FMCG side, I think it's a very, very different this thing because everybody is talking about a very good demand going forward. And I think the function is rural India because I think rural India would be the focus for next 1.5 years because I think a lot of spendings are happening and if you see most of the companies specifically having their presence in rural India, be it any of the sector, you will see CV financing or tractor financing, that side also they are doing very well because the rural sector as such is doing very well. So FMCG again 50%, most of the companies deliver 50% revenues from that, specifically HUL. So that's why these companies are doing well. I think for 1.5 years they will do probably better.
Okay, Sandeep, we'll leave it there. Thanks a lot for joining us today. That's the view from Edelweiss. By the way, the SPI stock is once again moving up.